Hello everyone, welcome to today's US Open live webinar. It is Tuesday, May the 2nd, 13:20 GMT, 10 minutes before Wall Street opens, our usual time. I'm your host, Nikos Zabouras, Senior Market Specialist at FXCM. It's a very busy week that has already started with a bang as the Reserve Bank of Australia delivered a surprise rate increase ahead of the decision by the Fed and the European Central Bank over the following days, while the embattled First Republic Bank was acquired by JP Morgan Chase. Before, however, we dive into all of that, as always, please read carefully the risk warnings and the disclaimers, and then we will get started. Once again, please read carefully through the risk warnings and the disclaimers, and please bear in mind that anything discussed within this webinar does not constitute investment advice and should not be construed as such. Okay, let's get the ball rolling. We have a lot to cover, as I already said, from the US banking sector, inflation figures from Eurozone, earnings from the United States, upcoming decision by the Fed and the European Central Bank. But let's start with the Australian dollar versus the US dollar, which rallies after the Reserve Bank of Australia announced its latest policy decision earlier today. So inflation had moderated in Australia to 7% in the first quarter, according to last week's data, and markets were expecting the RBA to stay again on the sidelines today after it had paused its rate hiking cycle in early April. However, policymakers delivered a surprise hike of a quarter percentage point and also left the door open to further tightening. They welcomed the inflation decline, which they believe has passed its peak, but they still view it as still too high. The Aussie soared as a result. You can see here this highlighted area of the first jump after today's decision, testing the 200 period EMA, the black line here, and the lower border of the daily Ichimoku cloud. This, from a technical standpoint, this brings 38.2% Fibonacci of the 2023 high-low drop. In its crosshairs, it's the 0.679, 0.6806 region around here. But new catalysts will be required for taking it out. Despite today's surge, the upside looks unfriendly. You can see we have the daily Ichimoku cloud and a series of other roadblocks, and the pair had repeatedly rejected the aforementioned Fibonacci. You can see here how in the past more than one times this level has been rejected, and that creates risk for new 2023 lows, which is located at 0.6563. So it's all gonna come down, of course, to the Fed decision, which is expected on Wednesday, and we will talk a little bit more about it as we go ahead. Now let's go to Euro USD, discuss the technical outlook, and also a few other developments that we have been having. Markets and policymakers, of course, have a lot of news to digest ahead of the policy decision by the Fed and the ECB. US March PCE inflation eased, but is still elevated. Q1 preliminary GDP expanded by just 1.1% according to last week's preliminary data. But on the other hand, factory activity expanded in April for the first time in months. Meanwhile, banking fears remain front and center as regulated seized First Republic Bank and the bulk of its assets were acquired by JP Morgan, changed the banking giant. This is, of course, after First Republic disclosed massive deposit outflows due to the fallout of the SVB failure, which we commented on last week. Now, on the other side of the Atlantic, over in Europe, after cooling significantly, headline inflation ticked up to 7% in April, according to today's preliminary figures, while the stickier core CPI inched lower to 5.6%, creating a murky backdrop ahead of the ECB decision. Meanwhile, from last week's data, economic activity had expanded in Q1, but just by 0.1% quarter over quarter. Now, USD slides this week, and it is in risk of sub 200 period EMA moves, which is this black line here. You can see how the pair is exposed to this support level, but the downside appears to be well protected, and a strong catalyst would be required for a breach of the broader 107.7, 107 region. Around here, you can see we have the daily Ichimoku cloud, we have the ascending trend line from the 2022 lows, and the daily exponential moving average all on this region. Of course, the outcome will be determined by what happens after the Fed and the ECB policy decisions on Wednesday and Thursday, respectively. And bulls are in control, but they will need the outcome of those events in order to be able to set new 2023 highs and tackle 1.1233. We will talk a little bit about those upcoming decisions at our last the last part of our today's session, as always. Now, we have 2 minutes yet before Wall Street opens. Let's go to the Nasdaq, the tech-heavy index from the United States. So we have here Nasdaq 100 FXCM's CFD. As we said last week, strong earnings by tech heavyweights, mostly Microsoft and Meta platforms, helped lift the index, offsetting banking jitters, and also help it to new 2023 highs. Bulls are clearly in control, and the road to 13,742 is still open, but that will depend on what happens with the Fed. Overall, the outlook has little change. The move is a bit stressed, again, from a purely technical perspective, and renewed pressure to test the 200 period EMA around here is still in play, but a catalyst will be needed for daily closes below it, which would expose it to the 11,500 region. You can see here ascending through line from this year's lows and the daily Ichimoku cloud, both of which can provide support. So that's it with the technical outlook. Let's see what we have ahead. Obviously, we have a central bank bonanza, as we said. The RBA started things off, as we already discussed. On Wednesday, we expect the Fed and the European Central Bank is due on Thursday. Both are widely expected to hike rates against a volatile backdrop. Now, the ECB has been very aggressive, but baseline expectations are for a slowdown in the pace of hikes with a quarter percentage move. But again, no one can rule out another 50 bps hike. It seems to be up in the air. Now, on the other hand, the Fed's own projections point to another 25 basis points hike this week before pausing due to recession fears and financial stress, which is clearly still in the system. However, on the other hand, elevated inflation and tight labor market keep pressure for prolonged restrictive stance. So again, there is quite a bit of uncertainty around those decisions. And other than the decision itself, it also has to do with what they communicate from that point on. What are they going to do next? So definitely pivotal meetings against the volatile backdrop, and uncertainty is high, even though both are generally expected by markets to hike again. Now, there are quite a few things here and there other than those big two events. We have labor figures from New Zealand for Q1. Last quarter, unemployment had ticked up to 3.4%, but it's still very close to historical lows. We also expect a series of services PMIs on Wednesday and Thursday from various regions and countries. Of course, we also have the earnings season in full deploy. Auto giant Ford reports after US close today. After an ugly fourth quarter full year results, which were concerning, it will be interesting to see how it fares this time around. Of course, those bad results were mostly due to execution issues amidst continued supply chain disruptions, with its CEO, Mr. Farley, noting that they left around 2 billion of profits on the table because of those things. The company has been pushing hard on electrification, however, and its F-150 Lightning electric pickup truck has sold nearly 20,000 units as of the end of March, in less than a year since it launched. So definitely the EV segment will be another focal point here. Now, earlier today, ride-hailing firm Uber set new record revenues and adjusted EBITDA widened profits, meaning widened, and the company expects the EBITDA profits to expand further in Q2. Gross bookings also grew, and further rise is projected for the second quarter. Uber stock, of course, was up in pre-market, so let's see how things turn out for the stock. That is pretty much for today's session. Thank you for joining me. We will talk again on Thursday, same time, 10 minutes before Wall Street opens, to discuss about the Fed and the ECB decision.